Good morning, everybody. We've got a higher trade in the grain markets here early on Wednesday morning. It is 6:30 a.m. Central Time. March corn futures up 5.5 cents at 5.73. January soybeans up 10.25 at 12.27.5. March Chicago wheat is up 7.25 at 7.94.5. March Kansas City wheat up 7 cents at 8.29.25. March spring wheat up 12.5 at 10.22.5. If you guys are listening on the podcast, appreciate it. Leave me a rating or review if you have not already. If you're watching on YouTube, hit that subscribe button, like these videos, help me to grow this channel. My goal is to get to 5,000 subscribers. I think we're at about 3,200, so help me out there. If you need some additional assistance from me, go to my website. It is www.standardgrain.com. Go to that website, click on Grain Marketing Plan in the upper right-hand corner. Check out my subscription service, guys, $49.99 a month. You get a ton of information direct from me. My morning email goes out every business day at about 6:30 a.m. Central Time, right before I start these live streams. My text message service, subscriber-only videos, any sort of consulting that you might need. A ton of information really specific to grain markets and grain marketing. This is a monthly deal. Cancel at any time. No other fee, no other obligation. I will not try to sell you anything else, I promise. Still quite a bit of fear, uncertainty, doubt regarding this COVID situation. I think the travel bans in particular are of concern. You've got the U.S. extending some travel restrictions. They're going to start doing more testing. You've got a whole bunch of countries that have restricted travel from South Africa in particular, and then a lot of other African nations. So this is of concern. I don't think anybody believes we're going back to a spring 2020 situation, but even if you were to get back to that sort of situation on a smaller scale, that would be extremely problematic for a lot of things. Reduced economic activity, reduced fuel usage, all of those sort of things. The World Health Organization said yesterday, blanket travel bans will not prevent the international spread, and they place a heavy burden on lives and livelihoods. So they're actually making some sense here. The verdict on vaccine effectiveness versus this new variant is still out. Studies will take months. BioNTech CEO, which is the Pfizer vaccine, they said that their vaccine would likely offer strong protection against severe disease from this new variant, while Moderna's CEO said earlier this week that their vaccine would likely provide decreased protection versus other variants. So there's still a lot of unknowns regarding the vaccine situation. Now, the grain markets are not the only markets that have taken a beating here. This has been a pretty widespread and broad-based sell-off in commodity markets and in other markets. This is the Bloomberg Commodity Index, this chart I'm showing you here. And this index peaked in October, and it's lost about 9% since then. And this index in particular, it's a very good gauge of commodity market activity in general, and it's weighted. So about 30% of it is energies, 23% grains, 16% industrial metals, 19% precious metals, 7% soft, 6% livestock. So this is a good gauge. And keep in mind, this index, the commodity markets as a whole, they rallied 80% from their spring 2020 low to the October high. So it was a very sharp rally, and now we've got a correction here. So this is not a collapse yet. This is a correction in what had been a very, very strong commodity bull market. So I don't necessarily think that it's cause for like significant concern, but certainly something to keep an eye on. Fund traders have likely been big time sellers in the grain markets these last few days. And prior to these last few days, prior to this new variant scare, you had funds very aggressive in the markets, and they were building length. This is a chart from my fund tracker charts, or one piece of it. And this is corn, soybeans, and wheat combined, the net fund position. So just since last Tuesday across those three markets, funds were long 432,000 contracts in net, and the estimate was 317,000 at yesterday's close. So they've peeled off more than 100,000 contracts across corn, soybeans, and wheat just over the last 7 trading sessions. Guys, if you're interested in the newsletter, I have charts like this for all three major grain markets, corn, soybeans, wheat, and then this combined chart every single week. It's certainly something to keep tabs on. Moving ahead from there, crude oil prices recover this morning ahead of this week's OPEC meeting. And there is some widespread speculation that OPEC may pause its plan to add 400,000 barrels a day of crude oil production. And that's kind of what they've been doing. But you've got these new travel bans, you've got reduced oil prices, and OPEC has been very cautious here. They don't want to be caught off guard like they were in spring 2020 when oil prices traded negative. That is what they want to avoid. So if they're seeing the situation here where, the United States and other countries are releasing reserves. We've got reduced oil prices. You've got now the risk with these travel bans and this new variant. They may very well come out and say that, we're not going to increase production as much as we had said. We're going to see the results of that 2-day meeting starts today, and I think it goes through tomorrow. USDA reported a flash sale of soybeans yesterday, not a huge amount, 132,000. That's about 5 million bushels. That was to an unknown destination. It was probably China. That's an amount that China likes to buy. They bought that exact same amount officially to China back on the 17th. Soybean sales in general continue to struggle. Same story, different day. Total accumulated soybean sales for the marketing year are down 30% versus the same period last year. So we really need to see much larger purchases if we're to even get anything that resembles USDA's projection in regard to soybean exports, because we are not even close right now. Jerome Powell was out yesterday. He talked to a Senate committee, and he wants to speed up the tapering process because of inflationary pressures, essentially. So this, I think, was maybe hurtful to the stock market in particular yesterday. Powell had several interesting quotes here. This was one of them. At this point, the economy is very strong and inflationary pressures are high, and therefore it is appropriate, in my view, to consider wrapping up the taper of our asset purchases, which we actually announced at the November meeting, perhaps a few months sooner. I expect we will discuss that at our upcoming meeting, which is this month. The Fed, of course, began reducing its monthly asset purchases of U.S. Treasuries and mortgage-backed securities in November. In regard to inflation, Powell said this: "The word transitory has different meanings to different people. To many, it carries a sense of short-lived. We tend to use it to mean that it won't leave a permanent mark in the form of higher inflation. I think it's probably a good time to retire that word and try to explain more clearly what we mean." The stock market didn't like what Powell said yesterday in regard to tapering in particular. He didn't say anything about interest rates, I don't think, but the equity markets finished with some big losses yesterday. They're up here today, and we've got a recovery across a lot of markets here this morning. The cattle market got beat up a little bit yesterday in the fat cattle contracts, down more than $1 pretty much across the board. Feeder cattle held together a little bit better. There was some scattered cash trade so far this week, 135 to 140, but probably not enough to hang your hat on. In the outside markets, the S&P is up 58, the Dow's up 321 ahead of the cash open. The U.S. dollar is just marginally lower. Bonds off a little bit. Gold and silver are higher. Crude oil is now up $2.96 at 69.14 in the January WTI contract. A little bit of a recovery there. Everybody have a great day today. I'll talk to you guys same time tomorrow.